Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was a very whipsaw price action on Friday. First of all, before we get into the non-farm payroll numbers, the Australian dollar fell to its lowest level since April. And as you can see from the market challenging that bull camp around 76.60, market did print a low of 76.44, but only briefly and then rebounded sharply, not breaking the bull camp. So at present, it still remains intact. What sent the market higher was a slightly weaker US dollar after the non-farm payroll numbers slipped under the 645,000 forecast and came in at 559,000, with the unemployment coming in a little bit lower from 6.1 to 5.8. It is interesting to see that from a technical point, I feel that the market is still somewhat negative and therefore could easily see a fall back towards the bull camp this week. If so, this level is getting weaker, and like previously, if we don't get a rebound as sharp, then the market may drop down towards a region of 75.80 as a potential target. Looking at the euro, well, the market still remains somewhat negative since breaking the trend line, but with the dollar index slipping back towards the 90 figure 15 area, has sort of put the euro on a potential climb. However, not today. It was on Friday. Still, the technicals are negative, and therefore I do believe that the euro will continue its trek since the break of the trend, along with the rejection of 122.60, gives me an objective of 119.90. Dollar yen, well, the market soon reversed its gains after prior the market challenged that topside level, which was around 110.30. Now I had resistance around 110.10, so it was only 20 points high, and now back towards that level of 109.45. A close underneath there would give further evidence towards 108.45 as an objective. The pound so far has respected level around 140.40.5. Nevertheless, from this sideways pattern that's been holding since May, we're not showing any clear direction. But that being said, let's have a look at the technicals. Well, the RSI is under the midway point after failing to break through there on Friday, and also the MACD is negative, setting up this week for a potential down test. I'm in view that the market will look towards 140, the figure, before any bullish response. That would mean that a break of the trend on the sterling yen could actually fall further, and therefore look towards the region of 153.30.35 and reassess. But technically though, it is negative, so I am in support of the bears. Very whipsaw price action for the gold after taking out the trigger level to the downside to confirm the outside range day. That was at 1,888, and the market did hit a low of 1,855 before rebounding. Now, unless we get a break above 1,898, then the bears should come back and take the challenge towards the objective of 1,836 to 1,846. Oil still pretty much on the target, that is, of $71, and I do anticipate from there could see a rejection. Still, there is at least $2 on the upside. Any pullbacks should be shallow. I do like the ADX and how strong it's holding, even though we are somewhat overbought, but nevertheless, could still see that challenge to the top side at $71, figure 60, reassess. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.